Okay, in this tutorial, I'll be going through with you stock called Ryanair, and you can just type it in Google and you can just see the information. And the name is Ryanair Holdings PLC, and this is the stock symbol. And you can see it's for 60.04 US dollars for one stock, and it's a billion size firm. It's a big size firm. It's not paying any dividend. I just want to point out that any company that is not paying dividend, that means they're any company that is paying dividend, that means they're financially very strong because that dividend is extra money of the firm. So after paying their creditors, costs, loans, liabilities, they still have extra money. That extra money it pays to shareholders as dividends. So you know that means that's extra money. So this firm is not paying any dividend. There could be many reasons to it. Maybe they are not financially strong, or maybe they are financially strong but they choose to reinvest in their own firm to further expand. So there could be many reasons behind this, so it's a very important aspect to look at. And let's go to Wikipedia and see when was this founded. I can just look at this box and I can see 1984, and I want to see what the employees have to think about this firm. So what I'll do is I'll copy this exactly from Google. I will paste it here. I'll tap Indeed reviews, click there, click the first one, and I can see we have 349 reviews. It's 3.4 star. Read through the reviews yourself. Check out the salaries, the photos, the jobs they've listed, the questions, and everything. And check out the reviews in Glassdoor as well. So I can see that it has 453 reviews and it's 2.9 star. Please read through the reviews yourself. Check out the jobs listed, the salaries they're giving, the interview questions, the benefits they're giving, and the photos. Let's have a look at the patents in Justia Patents and see if it has any patents or not. And click enter. I can't see any patents, so what I'll do is I'll just remove the PLC. Click enter. No patents. Okay, I'll just move this part as well. No, it doesn't have any patent. Okay, any firm that has patents, that means they are very strong in the market because they're innovating. So it's difficult to beat that firm, but this firm doesn't have any patent. Let's go to Yahoo Finance, and I want to see the key executives and salaries that they are getting. So I'll just pay. It's just loading right now. I'll type it again, maybe it will appear, and I'll click this one, yes, and then I'll just paste the stock here and click on the one that is Nasdaq symbol, and go to profile, and you can see okay, so I can't see any information regarding this, and I can't see I can't see the sector and everything, and I can't see. I'll just go to summary. Okay, okay, let me go to profile again. Yes, okay, that's fine. Sorry, there was something wrong with it. I can see the sector, industry, and the employees. And the thing to notice is they have 5 key executives, but none of their salaries have been shown, so it's not applicable. So, you need to be careful that you need to know all the salaries of the key executives for it to be transparent. Here it says not applicable, so this is something to search about why it's not applicable, because the more transparent about the salaries a firm is, the more trust we're able to build. So you need to search why it's not applicable. That's something to note about. Let's go to macro trend and see the ratios of this firm. Okay, and I'll go to price ratio, price book ratio, and then I'll just type in the symbol. Okay, I'll just explain you briefly while it's loading that if the price book ratio is less than 1, that means stock is cheap, it's undervalued, it's a discount. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So I can see right now I have 2.34, so it means somebody who will buy right now, they'll be paying 2.34 times more money to buy the stock. It's 2.34 times more expensive. Somebody who bought in 2018 March, they paid 5.5 times more money. They paid $122 to buy something that was $22 worth. Right now, it's 2.34 times more expensive. So, you need to be careful if you're buying a stock very expensive or cheap or whatever. And that's fine. And let's go to other ratios, and I want to have a look at current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5, that means stock is safe, it has a good margin of safety. Right now, it's less than 1.5, so it means stock is risky. Let's look at the previous trend. Has it ever been 1.5 or more than that? Yes, it has. So, but there are fluctuations that sometimes it is and then it's lower. So there are fluctuations. There's no, I would say there's no consistency. But I noticed that from 2005 up till, I would say, from 2005 up till I would say 2015 December, it's consistently 1.5 or more than that. So from 2005 up till 2015 December, it's consistently a safe stock, because it has always been above 1.5. But just recently in 2016 March, it's below 1.5, so it's a risky stock again. And then it's fluctuating, then it comes down, then it's fluctuating, then it comes down, and recently it's below 1.5. So recently it's not a very, it's a risky stock recently. So let's look at debt equity ratio. This ratio will tell me if the stock is mainly operating on debt or equity. So I'm looking for zero point 0.5 or less than that for it to be very safe. Let's have a look. Sometimes this website will take time to load, but don't worry about it because it has a lot of data, so it takes time to load. Be patient with it, but it will make your life quite easy. Hmm. Okay, so I can see that recently in June 2019 it's 0.79, so it's a lot more than zero point 0.5. I'm looking for zero point 0.5 or less than that for it to be safe. So it's not a safe stock right now in terms of debt. Let's look at the previous trend. Has it ever been below zero point 0.5 or less? Has it ever been zero point 0.5 or less than that? Let's have a look. So I can see that since 2005 up till now, consistently it has been more than zero point 0.5. So consistently it is a dangerous stock. It's a risky stock in terms of debt. Let's look at return on equity. Here I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Right now I can see that it's more than 8%. That means that the return is very good. That's brilliant. Let's look at the previous trend. Has it ever been below 8%? That's what I'm looking for. Yes, it has. So I can see that since 2010 March up till now, since recent 9 years, nearly 9 years, it has been consistently 8% or more than that. That's a brilliant return on equity. But before that, it's a minus, it's below 8%, it's fluctuating. But still, I can see that it's a very good return because consistently, since recent 8 or 9 years, it has been 8% or more than that. That's brilliant.